Hello everyone, and welcome to Zoom's Q3 Fiscal Year 2025 Earnings Webinar. I'm Charles Fodge, Head of Investor Relations, and I'm joined today by Zoom's founder and CEO, Eric Yuan, and CFO, Michelle Chang. Let's begin with a summary of the key financial highlights and management's commentary. Financial highlights for Q3 FY 2025. Total revenue, $1.178 billion, a 4% increase year-over-year, exceeding the high end of guidance by $13 million. Enterprise revenue grew approximately 6% year-over-year, now representing 59% of total revenue. Online revenue showed improvement with a decrease in average monthly churn to 2.7%, a 30 basis point improvement year-over-year, reaching its lowest reported level. Enterprise customers, $100,000 plus ARR grew 7% year-over-year, totaling just under 4,000 customers, contributing 31% of revenue. Enterprise net dollar expansion rate, 98% in Q3. Non-GAAP gross margin, 78.9%, a slight decrease from 79.7% in Q3 of last year, primarily due to investments in AI. The full-year FY 2025 gross margin is still expected to be around 79%. Non-GAAP income from operations, $458 million, exceeding guidance and representing a 38.9% operating margin. Non-GAAP diluted net income per share, $1.38, 7 cents above the high end of guidance. Deferred revenue grew 5% year-over-year to $1.38 billion, driven by refined discounting practices and lengthening billing terms. Operating cash flow, $483 million, a 2% decrease year-over-year. Free cash flow, $458 million, a 1% increase year-over-year. Share repurchases, $302 million in Q3, with an additional $1.2 billion authorized, bringing the total buyback program to approximately $2 billion expected by the end of fiscal 2026. Management's forecasts. Q4 FY 2025 revenue expected to be in the range of $1.175 billion to $1.180 billion, representing approximately 2.7% year-over-year growth. Q4 FY 2025 non-GAAP operating income expected to be in the range of $443 million to $448 million. Q4 FY 2025 non-GAAP EPS expected to be $1.29 to $1.30. Full year FY 2025 revenue raised to $4.656 billion to $4.661 billion, an increase of approximately 2.9% year-over-year. Full year FY 2025 non-GAAP operating income raised to $1.813 billion to $1.818 billion. Full year FY 2025 non-GAAP EPS raised to $5.41 to $5.43. Full year free cash flow expected to be towards the high end of the previously provided range of $1.58 billion to $1.62 billion. Key highlights and lowlights. Highlights: AI First Vision progress. AI Companion monthly active users grew 59% quarter-over-quarter. Adjacent market expansion. Strong traction in WorkVivo. 72% customer growth YoY. And Contact Center surpassed 1,250 customers, up over 82% YoY. Largest contact center deal. Secured a record-breaking contact center deal with over 20,000 seats. Customer trust and innovation demonstrated through positive feedback on AI Companion 2.0 and expansion of offerings like Customer AI Companion and Zoom Workplace for frontline workers. Improved online churn reached a company record low. Increased shareholder returns. New $1.2 billion share repurchase authorization. Corporate name change. Renamed to Zoom Communications Incorporated to reflect its evolution. Lowlights/areas of focus. Gross margin impact from AI investments. A slight year-over-year reduction in gross margin due to investments in AI infrastructure and talent. International revenue. APAC revenue was flat year-over-year, though it grew 2% on a constant currency basis. CEO Eric Yuan's key statements. AI-first work platform. Zoom's vision is to be an AI-first work platform for human connection, empowering customers to streamline information and make smarter use of their time. AI Companion 2.0. This major update expands AI capabilities, allowing it to synthesize information from broader contexts and orchestrate actions across the platform. Customers appreciate the innovation and its availability at no additional cost. Customization and monetization. Introduce plans for customizable AI Companions and AI Companion Studio for the first half of next year, which will offer monetization opportunities for enterprises with specific needs. Contact Center and WorkVivo's success highlighted the largest ever contact center deal and strong traction with WorkVivo, emphasizing their natural upsell potential to the Zoom Workplace base and their ability to attract new customers. Democratizing AI. Zoom's strategy is to offer high-quality AI capabilities with a focus on ease of use and total cost of ownership, positioning them favorably against competitors. Frontline worker focus. Announce Zoom Workplace for frontline workers, targeting industries like retail, healthcare, and manufacturing with mobile-centric features. Platform strategy. Emphasize the shift from point solutions to a platform approach, where customers leverage multiple services, further enhanced by AI. Trust and long-term relationships. Zoom prioritizes building long-term trust with customers through product quality, service, and a commitment to not adopting aggressive, price-gouging tactics. CFO Michelle Chang's key statements. Exceeding guidance. The company beat both top-line and profitability guidance for Q3. Revenue stabilization. Revenue growth showed improvement in Q3, with stabilization in the online business amidst ongoing macro conditions. Investment in growth. Investments are being made in AI, emerging growth businesses, and the platform to drive future top-line growth. Capital allocation. Reiterated confidence in Zoom's financial health and commitment to shareholder returns through share repurchases. Guidance philosophy. Will continue to adhere to a disciplined guidance philosophy, with more detailed FY2026 guidance to be provided in the next earnings call. Revenue drivers. Excited about the momentum in Zoom Phone, Contact Center, and WorkVivo, with AI monetization expected to contribute over time. Meta partnership. Confirmed the Meta partnership is a driver for WorkVivo growth, though not quantifying its specific contribution. Margin outlook. While investments in AI are impacting gross margins, Zoom remains focused on disciplined expense management and driving efficiencies. The long-term operating margin guidance remains a long-term scenario and not indicative of FY 2026. In closing, Zoom demonstrated strong performance in Q3 FY 2025, exceeding revenue and profitability expectations. The company is making significant strides in its AI-first vision, with AI Companion gaining strong adoption. Expansion into adjacent markets like Contact Center and WorkVivo is showing promising results, and the company is well-positioned to leverage its platform strategy for future growth. The focus on customer trust, innovation, and disciplined financial management underpins their strategy.